Hey everybody, Rob Maurer here, and today we are continuing our discussion on the macro environment, as well as a couple of pieces of Tesla news. Not a whole lot going on Tesla specific today, but we do have updated short interest and a review on the Model Y from Doug Demuro, who is a very popular YouTuber. So the markets were up a lot today. The Dow was up 11%. That was the best day for the Dow since 1933. The Nasdaq was up another 8%, and Tesla up 16.3% to $505 per share. All of this seemingly being driven by positive commentary around the likelihood of a deal being reached in Congress on a stimulus package. Democratic Speaker of the House Nancy Pelosi said today, quote, "I think there is a real optimism that we could get something done in the next few hours. We think the bill has moved sufficiently to the side of workers," end quote. Senate Majority Leader Mitch McConnell also commenting last night that he felt like they were on the 5-yard line for a deal. Now today saying it feels like they're on the 2-yard line. So with positive commentary coming from both parties, a deal appears to be imminent, and one may be even agreed to by the time this is published. Of course, the final details of the deal will be important in terms of the market reaction, and we'll have to wait and see on all of those. We just have various different leaks and commentary right now. As we discussed yesterday, lockdowns continue to increase. By midweek, it's expected that 54% of the US population will be placed in state shelter-in-home orders, which of course the exact policies vary by state, but as we also said yesterday, Trump continues today to make further comments about opening up the economy in his press conference saying, quote, "We'll be back in business as a country pretty soon. Let's go to work. Our country wasn't built to be shut down," end quote. And again, reiterating that they'll be reevaluating the lockdowns after a 15-day period. But a lot of these lockdowns or shelter-in-place orders are state mandated, so I'm not really sure what is meant by that unless it refers to sort of the international travel restrictions. So while the market seems to be liking that sort of commentary, I'm not putting a whole lot of weight in those comments right now. Perfect example of this is New York City Mayor Bill de Blasio today saying that the idea that New York City could be back to normal in April is, quote, "absolutely inconceivable," end quote. And while in a couple weeks we'll definitely see better data coming from China and likely from Europe as well, I think in the US it's still going to be a pretty bleak situation, and I can't see restrictions being reduced as we head into that peak. That being said, there is continued economic cost for these shutdowns. We're starting to see the effect of that. As I said yesterday, we got the PMI, Purchase Managers Index, updated numbers today. For context on how these indices work, they are collected and published by IHS Markit, and the index works sort of similar to Google Trends as we've talked about in the past, but here an index score of 50 represents neutral, and a score higher than that represents economic growth, whereas a score lower than that represents economic contraction. So the three reports that we have today are for manufacturing PMI, services PMI, and then the composite PMI, which is a blend of both. Unsurprisingly, the services PMI was hit the hardest. In February, services PMI indexed at 49.4, and now in March, it's indexing at 39.1. So IHS Markit says that this is, quote, "signaling the fastest contraction in business activity in the 10.5-year series history," end quote. In other words, as long as they've been recording this data. And that 39.1 index score is the lowest in series history as well. So fastest drop and lowest score. On the manufacturing end, scores did beat expectations handedly, falling to just 49.2 index score for March versus 50.7 in February. But that overperformance to expectations is apparently mostly due to time delay, with IHS Markit saying that the underlying data is concerning. Quote, "Manufacturers registered the fastest deterioration in operating conditions since the depths of the financial crisis in March," end quote. Also adding that, quote, "Note that the headline PMI was buoyed by longer supply delivery times. Steep rates of contraction were signaled for production and new orders, both of which fell to the greatest extent since 2009, end quote. So that is indicating that when we get these numbers again in the coming months, we should see a more steep decline in this PMI headline number. On the composite number, that dropped from a 49.6 index in February to 40.5 index for March, which is also a new series low. IHS Markit says, quote, "Looking ahead, companies were generally optimistic that business activity would increase over the coming year. However, the degree of business confidence was by far the lowest ever recorded by the survey, as firms expressed concerns regarding the longevity of shutdowns and the ongoing impact of the outbreak," end quote. When we bring that train of thought back to the stimulus package, of course, the actual financial benefit is very important from that sort of a bill, but there's also the underlying confidence that that can help provide, because clearly businesses are suffering through uncertainty right now, and uncertainty is risk. Markets don't like risk, businesses don't like risk. In terms of what these numbers mean, IHS Markit's chief business economist said, quote, "The survey underscores how the US is likely already in a recession that will inevitably deepen further," end quote. So again, I'm not trying to be overly negative by sharing these things. I'm not trying to, specifically find negative news to report on, but I think these indicators are important. The next one that we'll get later this week is the jobless report on Thursday, and we'll continue to keep an eye on these reports, positive or negative. On the manufacturing train of thought, Ford today announced that they will be extending the shutdown of their factories. Quote, "In light of various governments' orders to stay and work from home, Ford is not planning to restart our plants in the US, Canada, and Mexico on Monday, March 30th, as originally hoped," end quote. So no big surprise there. They also did not share a targeted reopening date. Moving into Tesla-specific news, as I said at the opening, Doug Demuro just did his review of the Model Y, posted that today. He has 3.5 million subscribers on YouTube, and already in the first 6 hours of this video, it has 500,000 views. So regardless of your thoughts, if any, on that channel, it is an important channel. And Doug Demuro said of the Model Y, quote, "I think it's the best combination of Tesla so far," and quote, "It might just be the best, most well-rounded Tesla yet," end quote. Overall, a really positive review from Doug. He gave it a 68 Doug score, which is actually higher than any other Tesla so far, with only a couple of complaints here and there on things like comfort and styling. Lastly, today we did have updated short interest for Tesla published after hours today. So this report is for the March 13th publishing date. Short interest continued to decline, down about 500,000 shares from the last report of February 28th to 16.2 million shares sold short. So that was a 3% decline in short interest, while over that same period of time, Tesla stock fell from about $668 per share to $547, down 18%. Short interest year to date is now down 38%. The next short interest update will be on April 9th, and that will be for the March 31st settlement date, which will just be a couple days prior to the release of the Q1 delivery and production report, which we should expect on April 2nd or April 3rd. So that is it for today. As always, thank you for listening. Don't forget to subscribe. Don't forget to follow me on Twitter at Tesla Podcast. And I'll see you tomorrow for the Wednesday, March 25th episode of Tesla Daily. Thank you.